The flow of revenue starts with the general ledger account, which leads into the charge code, followed by billing and sales items, which are then billed/sold through a sales area. The further down the chart you go, the more details/rules you can specify, and the more individualized things get, all ending with the inflow of revenue through a sales area. Let's start at the top of the flow chart by taking a look at general ledger accounts. The first thing you want to think about before creating your GL accounts is the numbering system you want to use. This will help with consistency and make things easier to follow in the system, and you can use the same numbering system for all your GL accounts. Standard GL account prefixes are common, usually with the account length being 4 or 5 digits, and the following digit at the beginning: 1 for assets, 2 for liabilities, 3 equity, 4 revenue, 5 cost of goods sold, 6, 7, and 8 expenses, and 9 other revenues and expenses. You can use the same numbering system you had previously, or feel free to take this time to revamp that numbering system into a new one, as you have the ability to start from scratch. If you want to adjust the numbering system, we suggest preparing a mapping list of new numbers to old numbers to assist with the entry of your GL accounts. The next thing you want to do is think about if you want to use departments or not, which can further break down the GL accounts. Departments are typically used for expenses and revenues. Examples can include grounds, golf, food and beverage, kitchen, and administration. Next, we have charge codes. Charge codes can also be referred to as revenue codes, which are a bundle of rules/defaults for the GL account that specify tax, late fees, etc. A charge code is required for any GL account that should be triggered on a sale or back office billing, such as food revenue, dues income, deferred income, etc. So usually a good spot to start is your liabilities and revenue accounts. These are usually triggered on sales or billing. Any GL account that won't be hit by a transaction does not need a charge code. These transactions can hit the GL account directly where needed. A charge code is behind every sales item, billing item, and payment item. You can have the system set up to have multiple charge codes point to the same GL account. Charge codes can also help with reporting. From here we have billing items and sales items. So let's start by taking a look at the billing items. Billing items are used for back office items like dues, locker fees, and more. So i.e. fees and transactions that are not sold at point of sale. For billing items, you will want to start thinking about what member billing will take place in the back office, and what charge codes you want to link them to. These sales hit the GL by charging a billing item, which links to the charge code to determine the taxes, GL accounts, etc. Then we have sales items. Sales items are sold at point of sale. It can be helpful to have a coding system in mind for sales items where you include the item type in the code. So for example, BV for beverage and 001 for the item number. For sales items, you will want to start thinking about what member-facing items will be sold to members for purchase, and what charge codes you want to link them to, and prepare everything in an Excel spreadsheet. You can also create a cleanup list, if possible or needed, of your old sales items to the new list of sales items to help with the data transfer, to remove items that are no longer used. This just helps speed up the process. Additionally, if different sales items are used for banquets or events, it is helpful to have a list of these items prepared as well. Also think about if the same item is sold in different areas, does anything change, like the price or the charge code? Lastly, think about menus and how you want items grouped. Example, dinner menu versus kids menu versus a dessert menu. Sales items hit the GL account the same way as billing items, but through a sale at point of sale or through an event. Finally, we have sales areas. Sales areas can also be referred to as a revenue center or reporting area and are how the club wants to record sales, which usually reflect physical POS locations such as the dining room, bar, and pro shop, or back office sales areas such as member events, initiation fees, and minimum billings. They help keep the system clean and help with clutter. They show what you need for that sales area instead of listing all items in the system. Therefore, you will only be able to see applicable sales items and billing items, etc., after selecting the applicable sales area. They can also help reduce the likelihood of an error. Let's look back at the flowchart. When you select a sales area, you will be able to see all available sales and billing items. For member transactions, after selecting a sales or billing item, that will be linked over to a charge code, which will specify any taxes, late fees, or other. That charge code will then hit the associated GL account or accounts. When a sale is made at POS or something is billed through back office, the sale takes place in the sales area and looks for the charge code on the item to direct the transaction to a particular GL account. All of these components have reporting implications. A sale can now be viewed under a sales area. Think of it like categorizing or grouping grill room sales, golf shop sales, dues billing, etc., and reported in the general ledger based on the charge code setup. Now this sale can be reported on either through a sales or billing report, think food and beverage manager or membership director, or through a general ledger report, think controller.